So hello, my name is Chris Kirby, Key Account Manager for Kensington Mortgages, here with Impact Specialist Finance. And what I'm here to do today is to talk to you about the Kensington Difference and really just explain in a bit more detail what that means to Kensington, what that means to yourselves, and I'll also give you a bit of a refresher around who is a Kensington client and ultimately how Impact Specialist Finance can utilise Kensington to help yourselves write more business and help more clients moving forward. As I mentioned, the Kensington Difference. What I will first of all is just explain what we actually mean by the Kensington Difference. Hopefully you'll have seen this on our social media platforms. And as I mentioned, who is a Kensington client? So I've broken this down into 6 specific areas for you. So we've got self-employed and contractors, getting the job done for those clients, complex incomes, heroes, young professionals and high earners, mortgage release proposition, which is a package exclusive, so make sure you're speaking to Impact about that, our new build proposition, and also credit profiles. You'll have hopefully seen Kensington as an adverse lender for a number of years. We still do that type of lending, and it'll be really important to make sure we're completely up to speed with the recent changes we've made to this. So what is the Kensington Difference? So we mention it, like I said, we put it on our social media platforms. What do we actually mean by the Kensington Difference? So the Kensington Difference, it shapes our overall proposition. So what we do, so mortgages with flexible lending criteria, and they're made to work with your client's circumstances. How do we do it? So it's using our head and heart to outsmart the algorithms. It's a manual underwrite, so we aren't an automated credit scoring type of lender, which can typically be an issue when going to your more mainstream rate-driven lenders. Okay, so with Kensington, it's a manual underwrite, and hopefully that allows us to look a lot more flexibly at your client's circumstances, understand the client, understand their needs, and hopefully help you as a result of that. And why we exist? So fundamentally, it's to help build a brighter future for those with extraordinary circumstances. We understand that not everybody is Monday to Friday, 9 to 5 with a nice clean credit profile with no outstanding debt. You know, people, they do have credit card balances, people are made redundant, people do work part-time, people do rely on flexible incomes. All of these things can be problematic when it comes to looking at your more mainstream lenders. So hopefully that's where Kensington can provide you with those solutions to help you help more of your clients. So that then leads on to the next point. Who actually is a Kensington client? So what I will start off first of all is with self-employed and contractors. So why do we talk about self-employed and contractors first of all? So in the UK, you've got 18 to 19% of the workforce is self-employed, or 4.9 million people. With Kensington, it actually makes up 40% of our residential business. So what are the benefits of our self-employed proposition? So how can you utilise Impact and benefit from Kensington's self-employed proposition? With only 1 year's trading, we will lend up to 85% loan to value. So they don't need a background in that line of work. Okay, as long as they've got a full 12 months figures, then we can lend up to 85%. With 2 years trading, we can lend up to 95% loan to value for a purchase. And the biggest aspect of this is that we'll look to utilise the most recent year's figures. So if you've got a client who's got a 5% deposit, they've been trading for 2 years and they want to buy a property now, speak to Impact, because with Kensington they can get up to 95% loan to value, and we'll look to use that most recent year's figures. Even if there's been a big jump in the figures, as long as we're happy that's sustainable, then that's okay. And finally, we'll use salary and net profit share when you've got a limited company director who owns 50% or more shareholding of the business. Okay, so they don't need to be drawing a dividend and paying tax on that. We can lend against the profitability and the salary that's been drawn. If they do earn less than 50%, then we will be using the dividend. Okay. But also when we're talking about self-employed, we're talking about your contractors as well. So for contractors, we'll lend at the day rate of 46 weeks. If you've got somebody who's relatively new to contracting, we ask for a 12-month contracting experience, and again, we can help those clients. For those that have been contracting for a longer period of time, not a problem. If they've taken a gap, if they've had maybe 3-4 months off to go travelling or maternity, whatever that might be, we've got flexibility to understand the circumstances and help those clients as well. Okay, 0 hours contractors. I know that politically some people love them, some people think they're exploitative. Whatever your opinions on them are, there are over 1 million people in the UK on a 0 hours contract. Kensington can help as long as agency workers or 0 hours contractors, as long as they've been in that line of work for 12 months, again, something we can have a look at. Okay, and then finally, CIS contractors, as long as they've got 12 months worth of vouchers, we can net that figure off and use that for affordability purposes. So plenty of flexibility, and that's the reason why Kensington does so much self-employed business. Okay, so just remember 85% with 1 year's trading. If they want to get 95%, speak to Impact. As long as they've got 2 years trading, it's something we can have a look at. Okay, and there you go, home of the self-employed mortgage. Complex incomes. So as I mentioned a few moments ago, less and less people are Monday to Friday 9 to 5 with a basic salary. We're in a 24-hour economy. More and more people are now getting things like overtime, bonuses and commission. So with Kensington, if you've got a 2-year track record with the same employer, then we can look to take 100% of whatever flexible income they have. So you may have somebody who is a car salesman. They earn £20,000 basic, but for the last couple of years they've earned £30,000 in commission. So they've got a £50,000 income. They want to borrow 95% loan to value. Not a problem. Speak to Impact. Impact know our circumstances. They know our proposition, and they know that we'll, with 2 years P60s, 3 pay slips that support that high level of income, we'll look to take 100% of that flexible income into consideration. Okay. We'll also consider secondary income streams as well. So it may well be that somebody has got 2 jobs. As long as they've had that second job for at least 6 months, we can consider that income. It may well be they get income derived from investments. It may be from pensions they have, or they could have income that's derived from a property portfolio. So as long as they've got income demonstrated either via their limited company accounts or an SA 302 showing profit from UK land and property, then again we can take that income into consideration as well. So heroes, young professionals and high earners. So this is where we've probably made the biggest change to our proposition over recent months, and this is ultimately ways to increase and enhance your borrowers, your clients, their affordability potential. So first of all, let's talk about the hero mortgage. So it's really actually important to actually define who is a hero. So with Kensington, a hero is anybody who works in the emergency services, so police, firefighters, NHS clinicians, or nurses and paramedics, armed forces personnel, and teachers and lecturers, as long as they're public sector. Okay, so what are the advantages of the hero mortgage? What differentiates the hero mortgage to the rest of the market? So for these clients, we will provide up to 5 times income subject to affordability. The big point to make across on this as well is that if, for example, applicant 1 is earning £30,000 and you've got a teacher, applicant 2, who is earning £25,000, just because applicant 1 doesn't technically qualify as a hero, because applicant 2 does, both of them can benefit from that enhanced income affordability stretch of up to 5 times income. Okay, so with Kensington, there is no minimum income required, and we will, as I've alluded to, allow for joint applications. Think of Kensington as an immediate solution for your clients. So make sure you're speaking to Impact, because they understand the specialist market. If you are looking for an immediate solution which involves borrowing as much as possible, then we may well be the solution for that type of client. Okay. So next up, young professional. So what do we mean by a young professional? They need to fall into one of 7 income categories. As you can see there, accountants, actuaries, barristers, commercial pilots, dentists, medical doctors and solicitors. Again, the advantages of the young professional proposition: we will lend up to 6 times income subject to affordability. Same rule as the hero mortgage. You could have a newly qualified doctor earning £25,000 as applicant 2. Applicant 1 could be an administrator earning £30,000. That would meet the £50,000 combined income requirement. Even though the young professional isn't the main earner, we can still provide up to a 6 times income stretch for this type of client. We've used technology, we've used analysing data from lending for over 25 years. We know that this type of client, not only have they got their income on a good upward trajectory over the coming years, but also they are statistically better payers of mortgages. So as a result of that, that's why we're happy to provide them with that greater affordability stretch if required. Again, think of Kensington, immediate solution to get your clients that maximum level of borrowing they may be looking for. And then finally, high earners. So any income stream, any profession, if you've got a combined income on an application that exceeds £100,000, then as long as they've got a 3-year clean credit profile, we can look at lending up to 6 times income for that type of client. So whether they're employed, self-employed, whether they're contractors, I'll go back to my previous slides where we're talking about complex incomes as well. Speak to your clients, ask them what income do you get, what income can you demonstrate, basic, overtime, commission, bonuses, if they've got secondary incomes as well. We can factor all of these in and we can look at getting up to 6 times income if they've got a combined income exceeding £100,000. We've also increased our loan to value limits as well. So we will now lend up to £500,000 at 95%. So speak to Impact if you've got those clients. As I've alluded to, house prices are rising. It's now becoming more and more difficult to save up the deposits, especially if you are renting. If you've got those clients that are looking to get 95%, speak to Impact and we can go up to £500,000 for that type of client. We can also lend up to 90% on loans up to £1 million. That's available to first time buyers as well as going up to 80% on loans up to £2 million as well. So plenty of flexibility to A, give your clients as much borrowing capability as possible, but also B, allow them to put down that minimum deposit as well if that's what they're looking to do. Mortgage release. So mortgage release is something new from Kensington. It's a package exclusive product. So again, further information and to place these applications, make sure you are speaking to Impact about these. So what mortgage release is a solution for those customers that are on a capital and interest repayment basis and they're looking for a 2-year fixed rate. However, the barrier that they've been finding is they don't meet the standard affordability of an owner-occupier mortgage with your traditional lenders. So the PRA has a guideline of a 3% stress rate for owner-occupiers affordability where the initial rate is below 5 years. However, what it does allow is for lenders to use a lower rate if this can be justified, and this is where our mortgage release proposition comes into this. So it is offered under current FCA regulation and it enables ourselves, which is what we're doing, to use a 1% stress rate for these types of loans. So the key criteria to speak to Impact about with this type of client is owner-occupier, pound for pound remortgage, where the existing mortgage has been held for at least 10 years. Okay, we can look at this on a 5-year term or a 10-year term where there's an element of interest only. It does need to be like for like in the term on the term as well. We'll lend up to 75% LTV, and the key thing with this is the affordability is stressed at 1%. Okay, as long as they've got a 3-year clean credit profile, this should hopefully provide a solution for some of those clients that you've maybe looked to remortgage, but affordability didn't give them that flexibility or that luxury previously. So I think with Kensington, with the mortgage release proposition that we do have, it enables you to write more business that maybe you've had to turn away or haven't been able to help with previously. So for that type of client where they are maybe with an existing lender on an SVR, they can't remortgage elsewhere, speak to Impact, we can hopefully provide that solution for you. Okay, new build. Again, the new build market is something that is continuing to grow with Kensington. Our new build volumes have increased by over 30% year on year, so it demonstrates that we've got a very good, strong, robust proposition for our new build clients. So how can we help? How can Impact help with our new build business? We now do help to buy in England, Wales and Scotland. Okay, we also do help to buy remortgage, and that does actually include a partial staircase as well. So that's especially useful if you've got maybe someone who's got help to buy in London with a 40% equity loan and they're looking to maybe repay 20% of that because of an increase in the value of the property and an increase in income that allows affordability to match that. Hopefully Kensington can provide that solution for you. Okay, we will allow up to 90% on new build houses and flats. So for those clients that have maybe got a 10% deposit, they maybe don't want to look at help to buy, we can do 90% on loans up to £1 million, as I've alluded to, and that's on new build houses and flats. We do allow family gifted deposits as well, so for clients that are looking to maybe get that 10% and the bank of mum and dad or the bank of grandma and granddad, it's a really, really good proposition that we can help you with. We do also allow for up to 5% builders incentives as well. Okay, so there's plenty of flexibility on the deposit sources as well as the lending capabilities that we'll give your clients. Okay, and our offers are valid for 6 months and we will extend them by a further 6 months. The benefit to yourselves as a business, it means you're spending less time rewriting the same business and more time writing new business, and hopefully that will support you with your business growth. And then finally, credit history. It seems unusual to get over 10 minutes into a conversation about Kensington until we've now finally talked about credit, but it's actually probably a good thing because it shows there's so much more that we can help you with and so many more solutions that we do provide. With credit history, what type of client would you be looking at for Kensington? What type of client would you be speaking to Impact about in relation to our credit profiling? Any credit score decline that you get, we do not credit score. We are more concerned about the conduct. It is only a soft footprint at dip stage as well. Okay, historic CCJs, defaults and secured loan arrears. We've got 3 core product ranges. Our select is available up to 95%, residential to 90%, and our options range, which allows for more recent adverse, is available up to 85%. So we've now got a lot more flexibility for the types of adverse credit history, credit profile cases that you may be looking at Kensington for. And that's why I'd say speak to Impact, because they know our proposition, they know what band your client would fit into. Have that conversation. They'll be able to support you with this. We help clients that are in active debt management plans. You've got 750,000 active debt management plans in the UK at the moment, so you will be seeing more and more of these moving forward. Access to debt, access to credit is as easy as it's been. Household debt's at the highest level it's been since 2008, so we do have a solution for these types of clients. Even those that have been repossessed historically, we can help those. As well, people with communications defaults, a mobile phone default, we're not concerned about those. So you can have a mobile phone default last week, that's not a problem. Speak to Impact will still be able to help that type of client. Okay, and then finally, as long as it's compliant, if you've got clients that are looking at debt consolidation to support them with their finances and their money management, our proposition allows debt consolidation up to 90% loan to value as well. So plenty of flexibility for those that maybe had historic adverse issues. It may well be just a lack of credit which has given them a low score, or people who have got current debt and they want to consolidate that. We've got plenty of flexibility to help them. Okay, so in summary, what have I just covered off with yourselves? Kensington's proposition. Self-employed and contractors, we rely on these people, you know, your brickies, your accountants, your plumbers, to get the job done. So now's an opportunity for yourselves as mortgage brokers to get the job done for that type of client and allow them to benefit from our proposition. We can help those with complex incomes, bonuses, overtime, commissions, second jobs, as well as heroes, young professionals and high earners. So if you've got clients that are looking for an income stretch, we've got that solution there for them, up to 6 times income. Mortgage release, helping those people that are maybe stuck with SVRs, with lenders that are either no longer trading or they can't remortgage because affordability isn't an option. Speak to Impact. Our mortgage release proposition will hopefully provide some solutions there for you. We've got a good, strong, robust new build proposition, giving help to buy in England, Wales and Scotland, as well as 90% on new builds in general, as well as a more flexible credit proposition as well. Okay, and we do advertise our service levels as well. Again, speaking with Impact, they understand what our underwriting requirements are, how to work with us. So if you do want a quick, efficient process, speak to Impact. Okay, and that just leaves me to say thank you for joining Impact Specialist Finance with myself from Kensington Mortgages. If you have any cases you want to discuss, make sure you're giving Impact a call on the number on screen now. And hopefully the Kensington Difference will be that it allows you to write more business and help more clients.